All right. Morning, guys. Welcome to today's session of Market Snapshot. My name is Samson Mzera, and I will be taking you through this session. We'll have a look at what happened throughout the week and how to go about it for the rest of the day and also for tomorrow. So, what you're looking at the moment is the chart. I think I'm having a connection problem. Keeps on disconnecting. Okay, so what we are looking at is we're going to have a look at the charts and then go to what has happened for the week, and then we're going to talk about estimates and what we expect for the rest of the quarter. So that's what we'll be trying to handle today. So yeah, so I hope my screen is back at the moment. If you can hear me, just say hi on the chat. Hello, Billy. So yeah, so quickly go through it right now. So okay, quickly start with gold. For the rest or for the better part of the week, we've had this move where gold has come back to where it started basically. So we had a push downwards. So we had a push downwards at the start of the week, and now it seems as though we are having some sort of recovery in the price movement, and that is we're going back up. So it will be we'll be trying to have a look at what is happening to the dollar. We'll be trying to have a look at what is happening to the dollar, and hopefully that will guide us with the outlook going forward. Remember, also gold is being affected by geopolitics. So we had that move downwards and then upwards. Remember, gold is being affected by geopolitics, and going forward, it's also going to try and shape basically our positions. So to some extent, we've had some resilience with gold. It's not affected too much by the conflict in the Middle East per se, but it does have some impact, and we'll also need to be careful. On a smaller time frame, it seems as though we've gotten to the high of the Asian session. So this was the Asian session, and earlier in the morning, we seem to have gone higher to break this Asian session, and might look like a potential reversal, but we need to study the overall direction. We need to understand why we have this sort of pullback at the moment, and whether it is indeed going to have a reversal effect. Okay, so that's the first one. Second chart is Euro USD. Same story. So if you look at the larger time frame, we've had this overall downwards direction. Remember, we are very we were very bearish with the dollar at the start of the year, but then again things have sort of started to shift a bit, and we'll discuss that when looking at the fundamentals. But the overall direction so far is down. If you go to the smaller time frame, that is H1, it seems as though we are coming back to this region over here and trying to fill up this imbalance. So at the moment, technically, looks as though we have a very high likelihood of a reversal, although again, we still need to go to the fundamentals and just cross-check and not overall direction. So looking at this, we have a few marked regions. First off, we have a downwards channel. Then from there, we have a few key areas to look for or to watch out for, and that is this region over here. So let me just zoom out. This region over here seems as though we've failed to go past this region over here. So this can be called an area of resistance. They're going to be looking more into it. In the event also we have more downward momentum, then this will be an interesting area. Remember, we have this entire imbalance that is partially filled. So this will be an interesting candle to see if this move right here is going to completely go until we get to the bottom of this demand zone over here. So this is where probably if we continue seeing selling pressure, this will be a potential target for traders. So that's one thing to watch out for. USD JPY. So coming off December, we are very bullish on Japanese yen. That means bearish on USD JPY. And things changed after the central bank came out, I think it was around this point, central bank came out and said they're not going to start hiking anytime soon. So that's why we had a complete reversal of that. But again, it does look like we're in an uptrend. We need to confirm our key areas and also have a backing with fundamentals for us to continue prospecting for longs along this chart. So that's for USD JPY. So you can just pause and then just see whether your charts and my charts are the same, or if you want to adjust your chart using my charts. So those are the key areas that I've marked, and those are the areas of interest that I'll be looking for. Next, we have the pound. So on a higher time frame, we seem to have been in a consolidation. So remember, this can tell you one thing. If you compare the pound and the euro has been in a downward trend, the pound has been in a consolidation. That means we have some strength. You've seen some considerable strength with the pound, and we need to understand why is that the case. So again, we'll be going to fundamentals to just cross-check. And then the same thing with US 500. So this one can be a proxy for all your other indices. Seem to be wanting to break the top of this area, and any positive news, I believe, will be good enough for us to go higher. So you just need to have a wait and see attitude for that for now. And then finally, we have Canadian dollar. Remember, we are trying to push higher, possibly into this zone over here. So we'll still be looking forward to see how that goes. We still have a minor zone over here that we can watch out for. Okay, now let's go to the fundamentals and quickly see how we're going to tie this up to the charts. Okay, first things first, news for the week. We had a very eventful week. Coming out from the what go on Tuesday, we had claimant count change for pound, and then the Canadian CPI, which came in hotter than expected. And then we also had, although this wasn't a very impactful speech, but we also had a central bank governor speaking. The CPI for the UK was also very hot. And you can start to see a continuous picture of, okay, we were expecting the dollar to be weak. So if these other economies have really strong, they have really strong inflation reports, then on the long term, we still expect a downwards direction for the dollar index. But then let's just quickly go into those forecasts. So I'll be using this article or excerpt from ING to sort of go through it. So G10 FX backup in short-term rates is dollar positive. So simply put, these are the economies also seem like the inflation is pretty up or very much high. So it might be a very tough case to build that you're going to see weaknesses in these other currencies. But anyway, let's get into it. So first currency you're going to look for is Euro USD. A dose of patience is required. So here they're saying there seems to be a strong conviction out there that the dollar will weaken this year. So everyone knows the dollar is going to weaken towards the end of the year. So that's already a given. But now the point is, what is the timing of this dollar weakness? And that's where the becomes a bit tricky. We agree that that view, but expect the story to be more evident in the second quarter. Yeah. So there was this idea that on March is when we start seeing cuts. But from the recent data that we've been seeing, it might not be so straightforward. So for example, like for the euro, before then the market looks to have gotten, so I'm just going through this over here. Yeah, so they're saying far too much easing is priced in with regards to the market and the euro and what the ECB is going to do. Yeah. So if you read here, before then, the market looks to have gotten ahead of itself, pricing in 18 basis points of Fed cuts at the March meeting. This looks highly unlikely, and combined seasonal trends which support the dollar in January should keep Euro USD at around 1.8. So the forecasts for Euro USD is around 1.08 or thereabouts. Why? Because going into December, there was a lot of excitement that we are going to see early cuts in the Fed, and it looks like that is being reprised as we speak. So that means we might not start seeing a very weak dollar as of yet. Yeah, so that's the general mood from the market, or what you're getting. Hey, Esther, Basto, and Kibirige. Nice to have you. Okay, far too much. Yeah, so basically, let's go back to that that Euro USD chart and just have a look at that translation. So if you go to the H4 chart, this rally over here produced some excitement. It was because of some excitement with regards to how soon the Fed is going to cut. Yeah, and it seemed this excitement is being reprised, and that's why we have this push coming back down in mid-December, because this is around December. The Fed came out and said something to do with we've paused easing. I mean, we've paused hiking rates, and that was a consensus view across the market. And it sort of started making people jump ahead and think, okay, we'll start cutting soon. And that's why the dollar weakened, and that's why Euro USD went this high. So if you look across the charts, across the board, you can see that December we had the market being very excited. This is GBP USD, which also had a push upwards after that meeting in mid-December. Yeah, and the same thing with USD JPY. From around mid-December, we had general weakness, which also partly explains this downwards move over here. Yeah, so that move is explained. So the retracement of that move is basically what you're talking about. That excitement is gone, and the market is starting to slowly come to reality that we might not start seeing a hike, possibly in the first quarter of the year. And that's why the entire gains of that moves are being erased at the moment. So you've sort of had some strength in the dollar by this downward trend. So if things continue as is, then you're likely going to be looking at this lower demand zone here as a potential target for this downwards trend. So that's what you're talking about at the moment. Let's go back to this article. Yeah, so they're saying, so first thing is 1.08. Let's just mark where 1.08 is. Yeah, 1.08 is exactly where we have marked our demand zone. So this point over here, so I'll just make sure this is flat at 1.08. Yeah, there. So it's exactly where our demand zone is. And this is a very interesting area to watch, especially if you start seeing market structure confirm that hypothesis. Remember, when you're doing fundamentals, it's not enough to just come and say sell. You know, you have to have a technical strategy that is going to confirm the hypothesis of, yes, there is downwards momentum and it's going to go lower. So your fundamentals and your technicals need to confirm. Your fundamentals give you your general bias, and your technicals give you your timings, when to enter, when not to enter. So again, you're going to have to rely on your technicals if the bias is indeed downwards. And the bias is, you need your strategy to confirm a continuation of this trend downwards for you to be confident with it. So that's all you're talking about. And there's a very good imbalance here that is not filled. So this section over here is an imbalance that you can as well look into to see if the market is indeed going to get into that zone over there. And if we fail to go to that point, then possibly we'll be looking to see if we can get to this supply zone. So there's a supply zone I've marked over here, that if we start seeing signs of bullishness in Euro USD, and there's a meeting next week, so it is possible. If we start seeing signs of a bullish Euro USD, then this could be a potential target to watch out for. That means if we see the market going higher, then this is probably where it's going, or where it's going to. Yeah, and then from here also we can start seeing, okay, is it possible that we need to come all the way to this point before now heading lower on the long term? That's a potential view. So it can either do that, or if we confirm a break below this point, so if the market just manages to break below this point, that's a confirmation of a downtrend, and you can expect that to continue going lower. So those are two alternatives depending on technicals. Now, it is possible that the fundamentals do change because we have a meeting next week for Europe, for ECB. So we're going to monitor that closely if it's indeed going to affect the current view. Yeah. Okay. So that's with Euro USD. Which website am I using? It's think.ing.com, and then you just go under articles. You can find them there. That's Mercy asking. Okay. Okay. Now let's go to USD JPY. So BOJ seems in no hurry to tighten policy. Remember what we said, I think it was in a session in December, that there were rumors that the Bank of Japan was going to start tightening. But tightening means them starting to hike rates. If you look at the interest rates of different countries, you can see that Japan has negative. So if you come here under central bank rates, you can see that New Zealand and the US have the highest interest rates, but Japan has negative, and it has been negative for the longest. Now, if at all they start increasing the interest rates, then that will be very good for the Japanese yen, and that's when we'll start seeing some strength in the Japanese yen. Because remember, because Japanese yen has been negative for all these years, if you look at a yearly trend of USD JPY, sorry about that. I think this is good enough. So if you look at the yearly trend of USD JPY, you can see that from around, where is it? Oh, you're not on USD JPY. This is Euro USD. Sorry about that. Yeah, so if you look at the yearly trend for USD JPY, you can see that it's sort of been behaving like the Kenya shilling. Yeah, we've been having this push upwards. Remember, Japanese yen and the shilling are usually 1-to-1 most of the times until around when now one continued weakening. But we used to be at a rate of 1-to-1 with the Japanese, but of course on different fundamentals. Now, with Japanese yen, the reason we've had this push upwards was because they're the only country in the G10 economies that has negative rates. And remember, that means in normal banks, you'd have interest on your deposits. But then now if a central bank starts asking for negative rates, then you can as well see why it doesn't encourage people depositing money and people just sitting around with cash in Japan. And that's why you've seen a lot of weakness from the Japanese yen. Now, when the rumors started in December, we sort of had this push. So when the rumors started in December, we sort of had this sudden, so from around December, the Japanese yen really started dropping because there were rumors from the market that they'll start tightening, they'll start increasing the interest rates. They're done with the yield curve control policy, but they came out and cleared those rumors, and that's why we had this correction from around the start of January. Yeah, so we've had this correction from around the start of January. Why? Because they say they are not intending to sort of start raising interest rates anytime soon, and that's why this title is here. BOJ or Bank of Japan seems to be in no hurry to tighten policy. Tighten meaning rising interest rates and their bond buying program ultimately halting it. So USD JPY came close to 140 late in December as the broad dollar decline and speculation over the Bank of Japan policy change. Yeah, so there was speculation that we already talked about. So regarding the BOJ, the mood music from Tokyo suggests no imminent changes. Yeah. Having said that, the consensus again is indeed we are going to see a weaker dollar eventually. So remember, there's also the dollar side of things that you have to consider. Yes, you might see a weaker dollar. So that's why I think they're projecting this gradual decline of the dollar against the Japanese yen. And also when they eventually change their mind about having negative rates, then it's probably going to have a positive impact. So that means a downward trend in USD JPY in the long run. So yeah, they're saying yet we think probably 152 probably was a top for USD JPY, and it will struggle to hold above 146, 147 levels. Also, the better terms of trade is providing external support for the yen. Yeah, so that's one thing to look at. So let's just look at that USD JPY chart one more time. There we go. So the consensus is because of the trade balance and everything. Because remember, if the yen gets cheaper, it's also easier to export things and demand increases generally. So 152 seems to be a peak for now. But if you're looking for short-term opportunities, then obviously you need to wait for a good pullback. So if anyone tries to go long at the moment, it will be chasing prices because you've already had a push, you've already had a higher high. So trying to chase price might be a tricky endeavor. So it's always good to see, are you going to get this at a discount at the moment? So if you use, for example, the FIB tool, are we going to see some slight reversal before now you can start thinking of going long in this currency or in this position? However, long term, when they eventually, or even when you're doing your own analysis, when they eventually start talking about raising rates and easing and tightening policy, then the long-term opinion is for the better part of the year, or in the event they start doing so, then we need to see possibilities of us now gradually coming back to where it all began, which is down here. Yeah, so that's the long-term view of the Japanese yen. Again, be very careful. Remember, your technicals have to confirm the fundamentals. Fundamentals do support this uptrend at the moment, but does the technical support it? Yeah, so those two things have to be in line. You can also always ask questions in the chat sections. I think I'll go through them one by one. What's the effect of today's GBP retail sales on USD? So have we talked about, no, you've not yet talked about pound. I think we are going to the pound. Just a minute with that question. How will the geopolitical tension in the Middle East affect Japan? Not so much, unless the tensions create an increase in oil prices. Remember, Japan is a net importer of oil. So unless fuel sort of goes high, and then that's when it will start affecting inflation in the Japan economy and things like that. But at the moment, the conflicts and the whole situation in the Middle East doesn't seem to have had any impact on any significant impact on oil. So I think that's a good thing. Okay, so let's talk about GBP USD. Again, remember the background theme is dollar might weaken, but it might not weaken as soon. Yeah, so you can even see their forecast is, yes, GBP USD will rise over time, 123, 124, 128, but the problem is timing, the timings of these entries, and that's where we need to be very careful at the moment. And then they're saying the 1 month bias is bearish. That means a weaker Japanese yen. Okay, so sterling has been able to hold on to its yearly gains pretty well. That means its strength, because it has strengthened a bit. But okay, the softer rate dollar equity that has domestic environment, which tax cuts an agenda, unlike September, I believe. So they're talking about tax cuts. So let me just zoom this in. The credible tax cuts funded by the law environment. They could add 0.2% KGP, which could make a case for Bank of England. It's tighter for longer. Okay, so just to break this down, remember with the UK, they've been also sort of having issues with how they finance the government. One of the prime ministers, you can remember, was taken out because they had suggested some really radical ways for financing in terms of taxation and everything like that. So I think it's still a major debate in the UK on tax cuts and things like that. So we believe that these are credible tax cuts funded by the lower environment for Fed for debt servicing costs. This could possibly add 0.2, 0.3% to GDP. So that seems to be the prevalent debate on the pound, with a case for BOE. But now what we are actually interested in is, will the Bank of England keep the rates higher for longer? Remember, in the previous meeting, the Bank of England came out very strongly and said we are going to continue maintaining high rates. And there's not going to be a debate on that until we start seeing signs of inflation coming back down. Remember, the UK had very high inflation still has the highest inflation in G10 economies. So 100% basis point easing cycle is the reason why we think the GBP will be contained this year, but there's a growing upside risks for GBP, for the pound. Yeah. So put things short and sweet. The pound is heavily data dependent, and that means as we continue to see data coming out, like today we've had retail sales data coming out, which look like there's been a slowdown in retail sales, change the total value of inflation adjusted. Yeah, so, but the key data primarily will be your inflation data and your employment data, and mainly the inflation data and how that trend is going to continue going forward. Yes, things like retail sales are obviously going to affect the pound in the short term. We've seen a spike in the morning for those of us who have been looking at it. So if we go to GBP USD, I've been using the H1 time frame at the moment. Yeah. So for those of us who are looking at GBP USD, we've had quite a huge reaction in the market earlier in the morning. Yeah, this small push downwards over here was because of the news, and that can possibly also set the trend of the day. So this big bearish candle here, the one that created after the news earlier today at 10. So going forward, what do you expect to see? Short-term trends, if we have okay, let me just go back to the H1 first. So in the short term, it seems as though we might continue seeing slight strength in the pound. But now remember what has been happening for the past 2-3 months with the pound, which is we've been consolidating on this range. Yeah, we've had some strength, but then afterwards it just consolidated, and we might have to rely on our technicals. And also with that short-term strength that we are seeing, then it's possible that this is an supply zone over here. This is now the H4 time frame. This is a supply zone, and we've just managed to get into it a bit, and it seems like we're having a sell-off from there, supported by those short-term fundamentals. Yeah, so it's very important to be careful with how we play this, because this is slight weakness in the pound, but we also expect weakness in the dollar in the long term. So those two things you have to like balance them. So for now though, the technicals do support slight short-term momentum, and that is supported by this over here, this announcement that we've seen coming out in the morning. Let me see if we've had any other announcement. Yeah, so we had inflation coming out earlier, and it's still very hot. 4%, that's even higher than the US, but it's still very hot. That's what I'm saying. For the short term, this might be a good idea, but on the long run, the Bank of England still anticipates to keep rates higher for long. And if the inflation is higher than that of the US, then probably they can even maintain their interest rates higher for longer than in the US. So that's one thing to take note of as we go forward. So news events that are not in line with this long-term view tend to create short-term reversals that traders can take advantage of. Case in point right now, if we see the market pushing lower, then it creates a potential for nice entry points back long. Example, like this gap we have over here, or at this point we have over here, this gap over here. Yeah, I mean this zone over here. So those might be potential entry points to see if you can go back up, considering overall theme is still higher for longer from the UK. So that's how I'd look at GBP USD going for longer. So it's more of a wait and see, especially with that small move. If retail sales is not really a key data point, so if it's causing the market to push down, a trader will really need to be careful, because retail sales is not such a major release, and it's not a data point the UK Bank of England is particularly looking at the moment, considering inflation is the main theme. So that's one way to look at it. So what are areas where I can see buying opportunities to sort of take this back up, or take this within this range that we've been seeing for the past entire year? So again, that analysis will coincide with the fact that there's a support zone over here. And if at all we come here, it will be very hard for us to go lower unless the market structure of the data supports it. So that's with GBP USD. So we've talked about Euro USD. We've talked about USD JPY. We've talked about GBP USD. Let's finally talk about Canada. Let's see if we have this on the charts. So again, I think I've already stated that for Euro USD, I was using H1 time frame. So Euro JPY, you just follow through with the analysis from Japanese yen and the Euro. Same thing with Euro GBP. We've said that pound looks to be stronger at the moment because of the higher for longer policy. So that means you can have a short term or a long term rather. So this is, I think this is the only one that's different from our analysis. 2024 election, no problem. So this is the only one that's different from our analysis. They're saying it's mildly bullish. However, the pound economy looks like it's still struggling. Oh, sorry, the UK economy looks like it's still struggling with inflation, and that might make it the last one to sort of start cutting rates. So, but again, you can read the article and see if you have a different opinion on it. So I'm looking for Canadian dollar and I don't see it over here. Oh, USD card. Okay. So mildly bullish. The rebound on the dollar the rebound in the dollar has taken USD card back to this after a drop to that. The Bank of Canada meets on 24th of January, and we see a high chance that it will follow the Fed in signaling rate cuts by year end. That's dropping the tightening bias. Now, this article, it's good to always cross-check. This article was released on 15th of January. That's 2 days ago. But if you go to the calendar, you can see that on 16th, inflation came out for Canada and it was still hot. Yeah. So it might not necessarily be the case that they might want to start cutting ahead of the Fed. Yeah. So having said that, again, the theme this year is which bank is going to start cutting first, which bank is going to blink first. Yeah. So if we go to USD Canadian, we sort of actually in the long term, we have this supply zone over here, and we've had prices pushing up to fill this region of imbalance over here. Yeah. So far on the daily chart, that's how it looks like. Sort of come back to this point over here. So I'll be curious to see if we can get to this point here. If we can really get here before we start looking for shorts. So that's how I play this. I wouldn't want to assume that because the Fed is going to start cutting, the Bank of Canada is also going to start cutting. So they are slightly different. Canada has slightly higher inflation, of course. So that's going to play a big role in how this goes forward. So that's with the USD card. And then getting back to the US economy and the dollar finally. So I'll put those two together. That is sorry, the gold, XAU USD, and S&P 500. So those are the last two we're going to look at. If you have any questions so far, just ask in the chat section while we wind up on this. Okay. So just a minute. Okay. So again, we said expectations are being tapered off with the Fed. That means people are, remember the trend for the past 1 year has been a very strong dollar. That has been the trend for the past two years actually. Yeah. And then coming towards December, with the December meeting, we sort of started seeing the Fed loosening their stance against a very strong dollar. And that's why we had slight weaknesses. But then of late, inflation has been high, employment has still been high. Actually, if you look at US inflation, it's still very sticky. So their target for inflation is around 2%. So where's the US CPI reading? Just a minute. Yeah, so if you look at inflation for the US, they were expecting 3.2%. It came out 3.4%. And if you look at the overall trend, we were sort of coming down nicely, yeah, because the target is 2%. But then once it got to around July last year, we haven't seen a downtrend ever since. We haven't seen a downtrend in inflation ever since. So that means there's a high likelihood of the Fed maintaining a tight monetary policy until this comes back down 2%. So in their December meeting, it looked as though things were coming back to normal and we might start seeing that downtrend eventually. But it's from even January, the spike went back up. So in December, there was at 3.2%, then it came back up to around 3.4%. So you can see that the thinking in the market, as this article here suggests, and I was looking for such an article, there is mounting evidence against a March cut. Yeah. So surprise is in jobless claims. Yeah, so that's basically what this article is saying. Another surprise is in jobless claims suggest a rate cut 2 months from now looks increasingly unrealistic. Markets, however, remain reluctant to completely rule it out. Today, we will hear from a few Fed speakers. Yeah, so basically that's it. And if you want to look at, or if you want to follow expectations of the Fed, you can simply go to the probability or the likelihood of interest rate cuts. You can simply go to the CME Group Fed Watch tool, and then you can be following how these probabilities go. So 12 days to the next meeting. So the big debate is on 20th of March. Yeah. So there is still a 55% chance, or guys are thinking there's a 55% chance that they might cut on March, but this has been reducing. I remember last week it was at about 60. Yeah. So less and less guys are thinking we'll have that cut. Remember, the cut is what makes the dollar weak. Less and less guys are thinking we'll have that cut in March. But if you look, for example, at around May or June, I think June is a good estimate. So you have almost 100%. So June and around May, 90 and 100%. So that suggests that we might see the cut further back into the year, maybe towards the end of the next quarter or somewhere there. But the March meeting doesn't look highly likely, and that's what is causing the dollar to be slightly strong. Yeah, so that's how you're going to look at it. As long as this continues going down, the probability of easing goes down. That means the market is starting to price in that we might not likely see any cuts. Then that means we might start seeing the dollar strengthening or holding some of its strength a bit. So if you look at the dollar index, for example, then you can see that it explains why we've had slight strength in the dollar. So let me just open that. So I'm just going to use the daily chart. Just a minute. Yeah, so basically the dollar has been strong for the longest, yeah. And then at some point towards the end of last year, we started seeing some weakness. However, now we are seeing complete turnaround and a reversal, possibly because the market is thinking we might not start seeing a cut as soon as March. And that's why you have the dollar sort of strengthening quite a bit at the moment. So that might hold off things like gold going too high. So going back to our charts, it might hold off gold being too strong. And that's why if you look at this in the long run, it's possible that we might continue seeing a gradual downtrend in the chart. So that's one way I look at gold. And if we presumably continue going higher, then I'll need to see very strong evidence with regards to that. So if gold is at all going to continue going higher, then we need to see a solid break from where it is at the moment and it holding above this level. Yeah. At the moment, there's a very strong case for downward trend, but if we see it going higher, then it has to really hold above that level and maintain that level going forward. So that's the opinion on gold. Again, if you go to a shorter time frame or maybe 30 minutes, you can see that on the short term, we broke the London session. We came back to this OP over here, supply zone, and it also confirms with this, we broke the high of the London session. So probably that might be a liquidity grab and low. So that's one thing to look at when you're doing your analysis for gold. But if at all you want to be bullish, it has to hold. It has to break above this point that you've marked and hold that level for you to say then gold is going to continue being bullish. And again, you'd still have a lot of key areas to look for, although these are a shorter time frame areas. But yeah, that's how I'd look at gold. Main hypothesis or the main theme, I think, is it's going to go lower because, again, slight of the strong dollar argument we've had from the fundamentals. And if this doesn't happen, then we need to see strong evidence of gold maintaining above that level for you to be bullish. Okay, I think that makes sense. Now, stocks are a bit difficult to sort of pin entirely on what is happening with the Fed because, again, the US economy is still very resilient. That one you have to give it, in as much as they have had high rates. And that could possibly explain why stocks are not going down anytime soon. Because if someone bought, for example, last year, January, if someone just bought the index and held, most of the times indices tend to finish positive for the year. So I'm looking for January. So this was January over here. This one. Somewhere over here. Yeah. Just a minute. Let me just confirm. Yeah. So this is January. So if someone bought and just held index, most of the times indices finish positive for the year. And it's only in a few years that you'll have indices being negative or lower than where they opened in January. So that's why a lot of the times guys just tend to be long on indices. But then again, your technicals, I always say your technicals have to confirm this. At the moment, we have a resistance level. That means the technicals are not confirming a clear bullish momentum at the time. So you need to be very careful with how you approach this. Possibly if you can try and look for potential areas where it can reverse into before going higher, then that's what will make sense if you are trying to build a bullish case for indices. Okay, I think that's it with our analysis. We've covered the main theories and the main concepts and what the market is thinking at the moment. For next week, we do have a bit of news coming out. Let me just zoom this one out. So for the following week or for next week, we have we have the ECB with their statement coming out. So this is going to determine whether you're still going to have a weaker a weaker euro, or it's going to sort of hold a bit. And the same thing with the Bank of Canada, which is coming out next week. Again, we said inflation last week was higher than expected, so they might also be very tough when they're talking next week. That means it might support a strong Canadian or USD card going lower. So those are the ones to watch out for. You've also talked about the Bank of Japan. You said they were reluctant to sort of start increasing interest rates. So you need to be careful with how you approach this. If their tone is still around the same lines, then of course you're going to continue seeing USD JPY trend in the same direction if they maintain what they've been saying all along. So the market isn't expecting them to start raising interest rates. It's still going to be negative unless now they surprise us. Yeah, so that's pretty much it for the week. Hope you've picked something and hope you've been able to match with your charts what we've been discussing. Okay, so how important is sentiment for position today? The link for the online class, let me see if I can find those. But I think if you contact your account manager, they should be able to assist you with the link because I'd have to access it it will be a process to retrieve it at the moment. So just contact your account manager or support, and they can make the registration link available to you. How important is sentiment for positioning today? So again, you can just rewind, and we've already discussed it. Usually when you're looking at sentiment, you look at what is the overall theme or the mood in the market, and then see if we have anything that's going to go against it. For example, we've said that we do expect a stronger stance from the Bank of England, but today's news has come out with the retail sales being slightly lower. That means, yes, we're going to see weaker pound in the short term, but possibly because the long term we still have high inflation, that weaker or that movement might be a short-term opportunity for traders to continue going with the bigger trend. So just rewind and carefully go through what are the main themes in each of the currencies or the pairs we've discussed for the day. Having said that, thanks for attending today's session. We don't have any other news for the day, I believe. Now, let me just check. We have the consumer sentiment. This shouldn't drastically change what we've discussed, because if again it's negative, or if it's against the dollar, then it's going to have give you a slight opportunity to continue with the long-term trend. But if it's in line with the dollar, it's not going to have anything. And by in line, I mean higher than expected. Yeah, it's not going to have a very huge impact at the moment, because the main theme we already have discussed, which is, I think you can rewind and just go through it slowly. Okay, having said that, thank you guys for attending today's session. We have a lot to unpack next week, especially with the central bank meetings, and see you in the next session. Goodbye.